I'm market analyst Michael Filighera of Traders Helping Traders with the Eye of the Storm podcast, helping you make informed trading decisions for the week ahead. Good day, everybody. I am Michael Filighera. I am the host here for the Eye of the Storm podcast. And today I have Wally Olopade coming to join me, and he's from Right Side Trading. And I have had a little bit of history with Wally because we've gotten the pleasure of doing web shows together and giving us both the opportunity to hear each other's work and to hear each other's analysis. And it has been incredible because I've grown to truly respect Wally's work and the effort that he puts in. But I'll tell you what I really, really like about it, folks, is the fact that he is a technical analyst.
Yes.
And we are in a technically driven market, pure and simple. And so when he goes out on a limb and makes a technical call, he's already, this through private conversation, he gets a lot of criticism for it. But what are you talking about? What's going on? And he sticks to his guns. And I have to tell you, sticking to your guns is the ticket, because often he's correct.
Yes.
And the market does follow through on exactly what he talks about. So I want to welcome him. Welcome, Wally. I'm so glad that you've chosen to come and guest with me today. And so why don't we begin by letting people know who you are, how this all came about, how you walked into this crazy business that we call analyzing and trading.
Sure.
And then we'll go on from there, and you can talk about right side trading as well.
Absolutely. Well, once again, first of all, thank you so much for having me on. Like you said, the feelings are mutual. I respect your work. I've seen what you've done. So when you told me to come on your podcast, it was a no-brainer. I was like, yes, I'll definitely come over here and share. So thank you for having me on.
Thank you.
But my story. So long story short, born in Washington, D.C., grew up in Nigeria. My parents are Nigerians, so I grew up in Nigeria, came back when I was 18, joined the military, Army, and served for 5 years, traveled around the world during that period of time. And my last duty station was Fort Bragg, North Carolina, and I wanted to stay in the hot weather. So I looked at the temperatures during the cold winter season in North Carolina, and I noticed that Florida had good warm weather. And so I packed up my stuff when I got out of the military and drove down to Florida, enrolled in school, and wanted to be an accountant because my dad was an accountant, my mom was an auditor. So I said, hey, keep it in line with a family business. Long story short, I went to college, met my wife, Tanya, in college, became college sweethearts, got married after college. I studied accounting. When I finished accounting, I realized that, you know what, there's more to life than just a 9 to 5. And so I wanted to be an entrepreneur. And at that time, real estate was the biggest thing that I would hear about. And so I got involved in real estate, did really well in real estate, did really, really well. And I remember, true story, I think it was October 2007. I was making so much money in real estate. One day I just thought to myself, I said, you know what? Making money is so easy. Even God can stop this. And next thing you know, 2 months later, real estate market crashed left. So I tell people, I say, yeah, they might say the subprime mortgage and everything. I said, well, you're looking at the guy who was guilty for causing the stock market crash of 2008. Needless to say, I lost everything.
Wow.
Everything. But I remember when that was beginning to happen, people were beginning to panic in real estate. Prices were overvalued just like it is right now. And I remember not knowing what to do. So 1 minute you hear people say, oh, no, we're not heading for a recession. The next minute you hear we are heading for a recession. And so it was just very confusing. And I didn't know who to believe and who not to believe. And then I remember by October of 2008, Obama became president. And then Obama said, no, we're not in a recession. Everything is fine. So I said, I'm going to believe Obama because he's the first Black president. He's saying we're not in a recession. I'm going to believe him, right? Well, you look back now, you ask anybody, was 2008 a recession or not? And what would they tell you? Yes, it was. But I remember going through it very vividly, even till today. It was like as if it was yesterday, and not knowing. And I didn't
Yeah.
like that feeling at all.
Yeah.
And I remember people like Warren Buffett and Donald Trump, they were not getting involved. They were not buying up properties at that time. And they said they wanted the market to crash. They wanted the market to crash before they start buying. And 2005, 2006, they were not buying anything. And I was like, why would they be buying? It's like, this is the perfect time, because everybody was saying this is the best time to be in real estate. Look at how much money, prices are going higher. It's never going to come down. And then after 2008, you start hearing Warren Buffett buying up, pretty much Bank of America. Donald Trump
Right.
started buying all kinds of properties and everything. So I was like, wow, they knew something that I did not know. And then you hear about people who bet against the market, like Michael Burry, who they made a whole movie about called The Big Short, and how he saw that it was going to come crashing down, and he betted against the market. So I said, wait a second, so you mean that people can actually bet against the market? So that was the first time I was actually exposed to the idea of you can bet against the market. And so that intrigued me. So long story short, at the time, I still was a little skeptical about the stock market. I said, nah, I'm not sure about that. But the real estate market crashed, I lost everything, and I had to start all over again. So then in the process of starting all over again, my mom gave me advice, said, look, get out of real estate and get into business. Just run your own business. And I said, okay, fine, I can do that. So I started running my business with my wife. We had a photography business that we were running. And I remember my son got pregnant in 2011, and huh? Oh, my wife got pregnant. My wife over here corrected me. She said, my wife, I don't know what I just said. I thought I said
You
my
said
wife
your
got
son
pregnant.
got pregnant.
Oh, my wife got pregnant. Okay. My wife got pregnant with my son. That's what it was. And so 2011 came, my wife got pregnant with my son, and she decided that she didn't want to do photography anymore. So I said, okay, fine. Let's wrap it up, start another business. And then a friend came to me and said, why didn't you sell the business? And I said, what do you mean you could sell the business? And he's like, yeah, you run a business so you can sell it. And I was like, how do you sell a business? I wasn't even aware that you could sell a business. And so he said, no, that's the whole purpose of owning a business is so you build it up so you can sell it. And I said, who would want to buy a business that I'm running? It's like, and it's like people do it all the time. And I said, wait a second. So if people do it all the time, how do you know if you're buying a good business from a bad business? And so, oh yeah, you just have to analyze the company and everything. And so that's when the light bulb went off in my head. I said, wait a second, I studied accounting. I know how to read financial statements. Let me go look at these companies and see. And so needless to say, I started working for this private equity firm. And my job with the private equity firm was to analyze the companies. And they would only buy companies that had been in business 5 years or more. Anything less than 5 years, they didn't even want to mess with it because it said it doesn't have a good track record. And so I came in there and I started analyzing companies. And with my knowledge of how to read financial statements, I was like, wow, here's some good companies, there's some bad companies. And it did really well. We were able to get good deals, pennies on the dollars that even the owners didn't know. We knew more than the brokers knew about the business and everything. And then I decided, I said, well, what if I could analyze the financial statements of companies in the stock market? And so that's where the transition began. And I said, So then I started analyzing the financial statements of companies. And one of the first things I wanted to do was like, okay, companies like Enron, how would you have known that Enron was a company going down the drain? And so I started doing my calculations. Like, wow. And I think as early as 1997, you could tell that Enron was running into trouble. And then it wasn't until 2001 before it went collapsing down. I was like, wow, this is, then I did WorldCom and I did the same thing. And I was like, wow, I think I've hit the jackpot figuring out how to analyze companies and seeing what is the undervalued company from an overpriced company. And so that's what started me into the stock market, because I said, if I can do this, then let me just go out there and start buying companies in the stock market.
Right.
So I took that knowledge and I said, good, I'm going to go start. And I found a book called Wall Street Money Machine by a guy named Wade Cook. Now, Wade Cook was very popular back then doing seminars and everything. So he had a book and I read it. It was about options. And so that really intrigued me. And I was like, whoa, I said, options is what I want to do. I want to do options. And so I remember going to my first meetup group. And at that meetup group, they told me, hey, and it was all about options. Like, how long have you been in the stock market? I haven't never traded stock markets. So if you had never traded stock market, why are you in an options group? Like, how did you even hear about options? Like, and this was before YouTube became what it is now. And they were telling me, it's like, most people don't even know about options unless they've been a veteran in the stock market. And I said, nah, I just read a book and I want to do options. And so long story short, I started getting involved in options, but I realized that companies that I thought were undervalued, that I'll buy options on, thinking that, okay, in time they're going to go up in value, never did. And then companies that I saw were like horrible from the financial statements, like these companies not worth anything at all, kept on going higher. And I was like, something wrong here. Like, why are the valuable companies not growing in price, but the overpriced companies keep on going higher in price? And that's when I heard about technical analysis. And I said, there's another way to analyze companies outside of the fundamentals. So I started studying technical analysis. The first person's book that I started reading was a guy by the name of Steve Nissen. A lot of people know who Steve Nissen is. They consider him the grandfather of candlesticks. So I studied his information. At that time, he used to have his courses, or maybe not him, but his courses, you could find his full courses on YouTube for free back in those days. Like complete course, 3 hours, 5 hours. And so I would just sit down there and just watch YouTube over and over and over. And then eventually they took it all down. But during that period of time, I was able to watch a lot of it. So I felt like I took his courses for free because it was literally everything online at that time. And so I started studying candlestick analysis. Then I started studying indicators and everything. And then the only difference was when I started applying it back, I started realizing that some things worked and some things did not. And so the analytical side of me decided to say, hey, wait a second, why is it that some are working and some are not? And so that's what made me start going into deeper and say, hey, how do I tell which one is going to work from which ones are not? And then that's when I came across quantitative analysis. And there's a guy by the name of Jim Simons who talks about quantitative analysis. And when I heard about that, and I was like, wow. And quantitative analysis is just basically the study of statistics. It's just data. It's like statistics. I mean, that's another way to say quantitative analysis, in a layman's way of saying it. But anyway, so me understanding math and understanding numbers, I gravitated to that very quickly. And I like the idea of just using numbers, mathematical formulas to figure out what is going to happen, predict patterns in price. And so when I combined that with technical analysis, and then I started using that to kind of help me see what's going on in the market and in stocks, it blew my mind. I was able to start seeing when stocks are ready to go up. I could see patterns of stocks ready to go down. I remember in 2015, one of the biggest things is like, is there a way to see a crash, like warning signs of a crash before the crash actually happens? And so I went back, I did some studies, and voila, I saw patterns that would show you when a stock is ready to crash. And end of story, I just took all that information together, started putting it together. And my whole thing was, I'm looking for patterns. And if I don't recognize a pattern, if it's not a pattern that I'm used to, I don't want to trade it. It doesn't matter how excited it is. It doesn't matter what the news is about. If it's not a pattern that I'm aware of, I stay away from it. And that's what we do now.
Right. Which is, I'm just listening. I'm finding so many overlap between me and you. I just in the path and how we got to where we are and what we use. It's like you mentioned Steve Nissen, and I worked with Steve Nissen and in learning candles. And I have his first book that he actually autographed for me.
No way.
Waiting for the day that somebody's really going to want it, right? But I found it to be very interesting because it's not a new analysis tool.
Right.
I mean, candlesticks have been used in Japan since forever, and to really go a lot of different things. So I like that overlap that we both have. And then the study of patterns. And I know that you and I have spoke of Elliott wave and Fibonacci. And do you have any background in Elliott, or I know you're aware of it?
I'm aware of it, but no. I started getting into it, but then I stopped getting into Elliott waves because I came across a guy by the name of Tom Bukowski. I don't know if you've heard of him, Thomas Bukowski. Thomas Bukowski has a encyclopedia on patterns. And so that kind of like diverted me into patterns and studying patterns. And by the time I was done with his book, I kind of already came up with my own formula, so to speak, and I just kind of like went off on that. So that's why I was already on the path to studying Elliott waves, but then I got sidetracked and then I never came back. That's kind of what
Which is
happened.
okay.
Yeah.
The overlap that we have when doing that analysis is remarkable, because again, Elliott wave is patterns,
Yes.
and how Elliott then broke that down, and really how he came about the theory or the principle. And what Elliott truly does is it measures the human emotional response. And so that's really what we track. And so by using that, we come up with the same conclusion likely that you're coming up with. It's like seeing a pattern that you go, this is going to go down.
Yeah.
This is telling me, and it's not going to go down easy. It's going to go down quick and hard.
Yes.
So we're coming up with the same answer with kind of the same types of analysis,
Sure.
but slight nuances that might be different. Your extremely strong background in numbers totally plays into what we do.
Absolutely.
And just really, I think, saves us more than not.
Yes.
You know, when we're out, you know, making a call or just putting something together. And it was me understanding numbers, even though my background and my university is I went to a conservatory of music.
Okay. Okay.
But as a friend of mine who got me into the trading, into options trading, was basically asking me, when you analyze music, what does it break down to? And I went, numbers. And he said, see,
Yeah.
it's all the
numbers,
same.
everything. Yeah.
And it's the same thing. Your study was in accounting, which is nothing more than crunching numbers, putting them together to come up with an answer.
Absolutely.
And so you walked in to do your analysis. It's like, well, I'm still crunching the numbers.
Yep, that's
I'm
correct.
still looking at it, and boom, I'm coming up with the answer that when we keep it, as I said in the introduction, being that you are a technical analyst, a quantitative, right? Almost.
Yes.
The whole way the markets are traded now, they're not traded like we used to. You know, they are quantitative, start to finish, because everything is computerized.
Exactly.
So that just keeps us in a quantitative mode. And then on top of that, everything is algorithmically controlled. So when we combine all of that and then put it together, which is what I have found so unique about your business, because I think that you're combining all of these necessary tools, putting them into the mix, let's call it, giving it a good shake, rolling it out, and you're coming up with answers that are clear, concise, and accurate.
Inaccurate. Thank you.
And I find that I'm very glad we're doing this, because my big thing is, like, when we've done shows together, even if you're coming in before or after me, and I'm always like telling people, like, you really want to listen to this guy, you really want to hear what he has to say, because he's not just blowing steam.
Yeah, no,
he's
I
giving
appreciate
you
that.
strong reasons for what. But because we live in an instant gratification world right now, if you're not correct on day 2, it's all worthless.
Yes.
You know? It's like, okay, I put this position on, when's it going to happen? So I love that when I hear you speaking, one of the things that I really do like and admire is you do include, this is what I'm looking at on the monthly chart. This is what I'm looking at on the daily chart.
Sure.
And it's similar to what I'm doing when I discussing Elliott, and I'm like, I may trade, because I'm a day trader, I may trade off of a 1 minute, 5 minute, maybe I'll check into my hourly chart several times during the day, but it's a 1 minute and a 5 minute chart.
Yeah.
And what I tell people is, like, if I'm basing a trade on a 1 minute chart, I have to understand that situation, that picture can change every minute.
Absolutely.
You know, let
me actually add to that too, because part of the reasons why I started doing that, you know, again, in life, we learn along the way, right? So when I first started trading, I used to trade the minute chart and a tick chart is what I was trading.
Right.
And I remember 2013 was my first full year of trading full time, and I blew my account 3 times that year.
I know that
When I
feeling.
came, yeah, I know, right? So at the end of that year, I remember just like sitting down, I was like, man, you listen to all these experts, you go to all these seminars. This is back when you actually attended real life seminars as
Right.
opposed to, what we do now. Um, you go to these seminars, you go to these life workshops, and you hear everything they say, and you see all the examples they give, and it makes so much sense. And then by the time I come back home and I try to transition that into real life, it's like it's not working the way that I was shown that it was supposed to work. And so in that process, 2013 blew my account 3 times. And I'm thinking to myself, okay, I understand how it works, but why is it not working? And it was at that point in time that I heard some guy, until today, I still don't know who he is anymore. But whoever that guy was, it was a YouTube video. I attended a webinar, and he said something that changed it all for me. And what he said is like, if you're not getting the results that you want on the time frame that you're on, then you need to zoom out into a bigger time frame.
Right.
And when he said that, I was like, wow. So he said, if you train in a 1 minute and you find that you're not getting the results you want, then maybe that time frame is too small. Zoom out to a 5 minute time frame. And if you're on the 5 minutes and you're not getting the results you want, zoom out into a 15 minute or 10 minute. And so when he said, the higher the time frame you zoom out into, the better your chances will be. And I cannot even tell you anything else that guy said, but that's the one thing that stuck out to me that day. And that literally changed everything for me, because I was okay, the 1 minute and the tick charts are not helping me. I mean, I blew my account 3 times trying to trade the 1 minute and the tick chart. Let me zoom out. So I decided to zoom out rather than the 5 minutes. So let me go 15 minutes. And I remember going to the 15-minute chart, and I looked at all the trades that I had put on the 1 minute and tick charts that I lost a lot of money on. And I was like, wow, it was much clearer that either one, I should not have taken that trade, or two, I should have held on to it rather than panic. And I would have seen that I made more money. So I was like, wow. So from there, I said, wait a second, if the 15-minute is that clear, what does the 30-minute and the hourly chart show? And so I zoomed out to that. And I was like, oh my gosh. And then I zoomed out. I said, wait a second, if that's clear, what's the daily chart and the weekly chart? And then by the time I came to the monthly chart, I realized the whole 2013, if I had not panicked like I did, and I just bought on January 1st of 2013 and held to December 31st, 2013, I would have made money. And then I started analyzing. I was like, wow, because the whole time I remember in 2013, for some reason, my mindset was that we were in a bear market. I don't know why. I think it was everything I was listening to, all the SAP story or the horror stories of the market's going to crash. So I think I was listening to that a lot. And so I was in this frame of mind that we're in a bear market. But when I looked at the monthly chart, I realized we were far from a bear market. It
Right.
was a super bullish market. And I
Right.
thought, just that alone, because if I wasn't trying to be bearish and instead trying to be bullish, I would have done so much better. So that's what changed it for me. And so in 2014, I dedicated 2014 just studying. That's when I started doing my real research. 2014, 2015. And by the time I was done with my research, about a year and a half later, I was like, oh my gosh, I figured it out. I remember the day I woke up my wife in bed. I was like, babe, I figured it out. I can see patterns consistently without guessing, without hoping or wishing. I can actually see it, and I can tell whether it went bullish or bearish. I can tell when it's turning from bullish to bearish and bearish to bullish. And so me seeing all that was simply just being able to zoom out. And so then I sat back and I said, I literally went back. I said, 2013, if I just traded, I think it was 9 times, if I find 9 good bottoming times during the year, because there's certain times when the market will bottom throughout the year. It's if I bought, and it was 9 times in 2013. I said, if I just bought all 9 of those and did nothing else but just buy when I saw those patterns of a bottom in 2013, I would have doubled my account rather than blowing it. And then I went back to 2014 and I saw the same thing. And then 2015, I saw the same thing. So by 2016, I said, you know what? This is what I'm going to do. I'm not going to trade the daily chart. I mean, the minute chart. I'm not going to trade anything intraday. I'm just going to find those 8 to 9 times throughout the year where the market hits the bottom before it rallies to new all-time highs. I said, that's what I'm going to focus on. So 2016, that was my plan. That was my game plan. And so I zoomed out of the daily chart, I mean, the minute intraday chart. And I just bought I think I bought 7 times in 2016, and my account doubled by the
And
end of
thus the birth
2016.
of right side trading.
And thus the birth of right side trading.
I love that.
Exactly.
That's great.
Yes.
And I think it's important. I'm so glad that we just had this opportunity that you could really explain that, because what you went through and even what I've gone through, we're not the only ones
No.
that, through
No.
trial and error to try to determine. So I think what
Yes.
I'm going to add at this point is, like, folks, Wally has done the work before you.
Yes.
If you're going to come in and listen to what we have to say, so because to just balance that out, I let it be known that my analysis and what I'm presenting is, it doesn't make any difference to me. I do not take a directional bias, and I do that on purpose.
Good.
Because I'm a day trader. I was a position trader, and then I approached the market exactly as you're describing, because I wanted to put on positions that I could keep and then be ready for when the move would happen.
Sure.
Now I've kind of switched that, and I'm walking in every day, clean slate, fresh move. What are we going to do? And so again, it's like my time frame is a 1 minute and a 5 minute chart. So I have to go through that explanation. It's basically what you're saying is that if you had taken that step back and taken that longer view or that larger view, you would have doubled your money. And I agree with that so much. So I think it's very important for people to understand. It's like, if you're going to go listen to somebody because they're good and they understand what's going on in the market and what they say you see happening, also put it in the time frame of which they're trading.
Exactly. Exactly. God bless you for saying that. That is so huge, because I think this is exactly what you said. I tell people all the time, I said, look, the reason why I don't necessarily recommend just giving trades, because you got to understand what time frame you feel comfortable with. And I've seen people who would say, oh, you know what, Wally, because I like your success, I want to follow your success. So I said, okay, fine. I said, but I do daily, weekly, and monthly. Oh yeah, no problem. That will work great for me, right? But then they're literally watching the market every minute of the day. And I said, okay, you're not a daily, weekly, monthly guy. If that's the case, it's like in your head, you want to be a daily, weekly, monthly, but in your soul, you are a minute by minute time frame guy. I said, pay attention to how often you look at the charts during the day. And what time frame are you focusing on? Because if you stand at the computer every single minute and you cannot remove yourself from the computer, then you're really not a daily, weekly, or monthly time frame guy. You're really an intraday type of guy. Now, for me, I had to get away from the intraday because it used to give me headaches. I kid you not.
Wow.
Psychologically, I could not handle it. Like how you said, I seen, and again, when I started, it was like, come in with a clean slate. But me coming in with a clean slate every single day petrified me. Okay. I would have anxiety because I'm thinking, oh my goodness, the sheer stress I put on myself is like, I have to perform today. I have to perform today. It put an added level of stress that did not allow me to do well. And then God forbid I didn't make money that day. The next day it became worse because now I'm still thinking about the loss from the day before, and I could not shake that off of my mind.
Right.
And so I realized, and I would literally go into the office, and I'm talking about massive headaches by the time I'm done. And then I started having, illusions of, hey, maybe the reason why I lost today was because I'm wearing red. My clothes are red, right? So I'm like looking at, you talk about a guy who's a quantitative data analyst, and then now I'm beginning to believe in the superstition of, oh, because I had red shoes on today, that's the reason why. And I kid you not, I remember one time I went in and I went through my whole closet at home. Anything that had red in it, I took it out and burned it in the fire pit because I was like, that's the reason why I'm losing money. And then I had to sit down and I said, okay, Wally, that's ridiculous. It's like, you are a data person. This is not the way it works, So I said, okay, that just tells me that you are not, your mindset is not suited for an intraday time frame. Not that that doesn't work. It's just that psychologically for me, I could not handle that.
Right.
And so I realized that with me, I need time to analyze the data. I need time to double check my work. I need time to give it enough room to make sure that I have time to double check it, ask for more advice, come back again and check it again before I decide I want to get out of a trade. And I realized the daily, weekly, monthly does that for me. And so that's why I stick with that time frame. It's not to say that any other time frame is not good, but I think what people don't do is they don't take the time to realize, what am I good at? I have some students right now, it's like, waiting a whole day, waiting a week is like eternity for them.
Forever.
They can't do that.
Forever. Yeah.
They can't. And I say, okay, that's okay. At least you know that. Are you good? Can you multitask at the same time? It's like, oh yeah, that's the way my brain works. Okay, great. Then daily, weekly, monthly is not what you need. What you need is a 1 minute, a 5 minute, 10 minutes, something that's going to make you keep on staying active on your toes and stuff like that.
Right.
But for me, I'm so laid back that I'm like, nope. That's only going to cause me stress. So I said, so that's why I became a position trader.
Your blood pressure is probably well in control compared to that person who wants to be in it every 1 minute and 5 minutes or whatever.
But some people can handle that. Some people
they think they can.
Well, yeah, that's a good point.
But I think just to add, because I do not disagree with what you're saying at all. In fact, I stand in total agreement with you. But again, I think that like, because of the pandemic, because of everything that we've been through financially in our country, and individuals have been, they see, because they watch YouTube, they see all of these different things where you've got people saying, I made $10,000 today, or I made $2,000 today, or I did this today. And it's like, I need a piece of that. And unfortunately, it has created the cryptocurrency world. And so we've got situations like we do right now by that NFX or whatever that firm is, that FTX going down and under. And then when you really sit down and look at it, it's like, well, how much of cryptocurrency, because it's new, is just a fly in whatever. And so, yeah, people have made a lot of money by selling non-fungible tokens. Something that it's like, it's virtual. What do I get? Nothing. You got to hope a woman in prayer. Well, but then what they see is you get all these other people that go out on YouTube and they put out the word, oh, you've got to have this one, or you've got to have that one. This is going to go up to 150%. And lo and behold, because they're out there doing it, it does.
Yeah.
So everybody wants to jump in. Everybody wants to come in, and it's a whole different situation. And I think that what we're attempting to do is to go into established product.
Yes.
Which doesn't mean that it's not as manipulated as the next.
Oh, no,
because it can be.
Yes.
But I think it's understanding at the same time, what is your competition?
Yes.
An algorithm.
I agree.
A computer.
I agree.
Which has no emotions, which has no feelings.
No feelings.
Which has no care.
Yep.
Right? Any of the emotional stuff that we bring into our own trading, it doesn't. Now, take away, or we come in with the person who's new, who maybe has scraped together $5,000 or $10,000, and now they want to invest it and turn that 10,000 into $1 million, because that's what they hear is happening over here.
Yeah. Yep.
And it's like, now try to explain to them the reality. It's like, if you're able to do that and you do it quickly, it's pure luck.
Yeah.
Well, just tell me where am I going to get lucky? It's like, I can't.
Yeah.
And then that's one way that I feel I could separate, not necessarily a tire kicker, but somebody who's like, you're desperate to do and to earn money for some other reason. Because if you're not willing to learn and pick up the strategies and pick up the different techniques that I'm going to be using or you're using to tell us what to do. Yeah. Then there's nothing that I'm going to be able to say that's going to satisfy what they want.
Yeah, let me also touch on that too, because I think that's a very good point. Because I went through the same thing. When I first started. I was the young and vibrant guy that's like, yes, I'm going to trade every single market, every single commodities out there. I'm going to make so much money in like 2 days, and I'm going to be done and retire, right? So I went through that too as well. But one of the things I don't know why, but for some reason, Warren Buffett was one of my, heroes that I looked up to in the investing world. Even before I got involved in the stock market, I used to read his books or books about him and everything. Long story short is this. I started realizing Warren Buffett said something in one clip that I saw where he said, if you want to learn something new, go read something 100 years ago. And I said, huh?
Yeah.
I said, if you want to learn something new, go read something 100 years ago. I was like, but that's 100 years ago. That's old. And his point was, that's exactly the thing. It's like in life, everything is the same. There's a saying in the Bible that says, there's nothing new under the face of the sun. What
Amen.
has been before. So when I heard him say that, and he said, read something from 100 years ago, then I started looking. I said, you know what? Think about it. Peter Lynch, Warren Buffett, Carl Icahn, all these guys, what they do and who they learn from was people from 50, 60, 100 years ago. So then I said, and you look at them, there's no question about it. They are multi-billionaires, okay? And they say, this is what I learned. This is what I learned. I went over here and I learned this and this. So I started saying to myself, I said, you know what? I don't want to listen to the brand new people anymore. I want to listen to people who have experience behind them.
Right.
And that was my thing. I said, so at that point, I said, and I hope anybody listening to this doesn't take offense to this, but if I saw that this person had just started trading a year ago, 2 years ago, I wouldn't even listen to them. Not because I'm disrespecting them in any kind of way, but my preference was show me a person who has been in the business for 10 years, 20 years, 30 years, 40 years. Those people have gone through bear market, volatile market, flash crashes. They've gone through all of it and they still here.
And I'm still here.
I want to learn what those guys know. So because of that, I started listening to people like John Sequoia, Ed Sequoia, Peter Lynch. I would listen to anything Peter Lynch says way before I listen to a YouTuber on YouTube now today. I would listen to Warren Buffett, Charlie Munger. And the thing I started realizing was like, they all said it. You have John Templeton. I would listen to people like that who are bona fide. I'm talking about bona fide multi-billionaire. Paul Tudor Jones. They all will tell you that they didn't expect to make their money in 2 years. It took them longer than 2 years. But
They're
the thing
in it for the
is,
long haul.
they in it for the long haul. And when I started seeing that, and I say, the companies, like most of them were position traders. They did some day trading, don't get me wrong, but a good portion of them was like, they did a lot of research. They knew that these were companies that were going to do well over a period of time, and they sat on those stocks to let it grow.
Right.
And then I started thinking, I said, wow, if that's the case, if you think about anything in life, when a baby is conceived, they don't get born the next day. It still takes them 9 months to come out. And then even after that 9 months, they are not the person that they are until years later. There's a lot of nurturing and growing. You plant a crop. You plant a corn seed in the ground and expect that corn seed to grow by the next day. Impossible. But if you nurture it and water it and fertilize it and let it grow and all that kind of stuff, 3 months from now, 6 months from now, you have a bountiful harvest. And then that's when it started hitting me. I said, wait, you know what? The stock market is no different. Matter of fact, any business is no different.
Right.
The stock market was the only business that I knew that people wanted to jump into, no experience, no education, but they want to do what you've done. And then you tell them, I've been doing this for 40 years. But it's like, okay, take all your 40 years and show it to me in 2 days, and I want that result by tomorrow. It's like, it doesn't work that way.
Oh, I've had those in coaching.
You see, I've had the same thing too. And I have to help people see, it's like, no. You're going to have to change your mindset. And for me, that's really what it became. And so after listening to all these guys, I realized that, you know what, there's a time that, again, you have to understand yourself well. But for me, and the people that I like to help, so look, I tell you, look, I'm not going to be the guy that will tell you you're going to make 2,000% tomorrow. But what I can assure you is that if you do what I'm showing you to do in my coaching program that I offer people, I said 3 years from today, if you haven't grown your account significantly, it's because you did not do what you were supposed to do. Simple as that.
Amen. And
it's as simple as
that's
that.
the perfect opportunity to segue. And so I'm gonna take that opportunity because you mentioned your coaching studies, things that people can come in and learn. And so I want to allow, first of all, thank you so much for sharing your background, because I think you and I could talk for another 2 hours.
Oh, yes.
About how we arrived where we are.
Absolutely.
But I find a lot of similarities. And just to kind of piggyback just for a moment, and then I'm going to segue over, because I do want to talk about rightsidetrading.com, because I think it's important that people know, they need to know, excuse me, your backstory. how you came to be where you are, so that we can garner some interest
Sure.
into this work that you're continuing to do. But you made a very, very clear and a very important statement on, if you want to learn something new, go read something from 100 years ago. When I needed to really pick up a clearer and precise way to analyze a market, because again, at this time, I was a market maker, an options
Okay.
market maker,
Oh,
standing
wow.
trying to figure out, well, I'm looking up at this stuff like, okay, do I really want to get long calls? Do I really want to be long puts? What do I need to do? Because I'm looking at that and it's telling me nothing.
Mm,
So I went to Elliott Wave. I was introduced
mm.
to Elliott Wave. And one of the beauties and the benefits that I've had is that right now, the father of Elliott Wave, so to speak, maybe he's now the grandfather, besides Elliott himself, who's no longer with us, is Robert Prechter.
Okay.
And Robert Prechter and Dan Ascani were my teachers.
Mm.
And so, but it was going back to R.N. Elliott's works, which go back to the 1930s and
Wow.
1940s, is
Wow.
where he put that all together. And the market that he analyzed to teach everybody at the time was the New York Stock Exchange, and it was stocks. And we didn't call it equities then; they were stocks, the
Gotcha.
stock market. But he made references to the buildup and then the crash of 29.
Oh, wow. Okay.
But then he tied it all together by saying that what he noticed were repetitive patterns. And those repetitive patterns were tied to human emotional responses,
Yes.
of which we already
Yes.
know, any of us who have been trading in the market long enough, there's only two: greed
Yep.
and fear.
Greed, fear.
That's all we
Yep.
got, folks. It's
That's all
it.
we got.
Greed and fear. Greed that you're not going to have enough, and fear that you're going to lose it.
Yep.
And that's what comes into play in mass now. And plus, now that it's all electronic, it's even wilder.
Right.
So
Yes.
I'm going to stand in total agreement with what Warren Buffett said, and then your own methodology of saying, I am going to go back and see what I can learn. And lo and behold, you did.
Yes.
And you've made it very useful, and you've incorporated it into your business. So
Absolutely.
using that segue, I would like to segue over, and please tell us about rightsidetrading.com and what's important with on your site, and
Sure.
what you specifically have out there for people who want to follow you, who want
Gotcha.
to learn what you're doing and how they can implement that.
Okay. Yeah, I appreciate that. So first things first is I would say the way I had it broken down was right now I have a course on understanding candlesticks. And in my candlestick course, the biggest thing I did was all my research that I've done, I've narrowed it now down to 7 candlesticks that I see happen consistently, so consistent that I literally do not care or pay any attention to any other candlesticks apart from those 7. And so the way I like to tell people is I said, think about it like the alphabets in the English language. There's 26 of them. I said in the stock market, when it comes to candlesticks, there's only 7 you really, really need to know. If you know those 7, then quite frankly, you will know everything about candlesticks there is out there. And the reason why is because I started realizing when I was doing my research is that there are some that occur at almost every single reversal, bullish or bearish. Okay. Now there are others that might occur, but they come few and in between. Okay. So in that case, it's like, okay, after doing my research and doing all the studies, okay, the few and in between that happens, like, don't even worry about it. If it happens, okay, good luck. But more than often, I said, you will see these. And then what I realize is that no matter what other candlestick appears, there are about 5 that will almost always, 80, 90, 95% of the time, will show up right before that reversal takes place. And that just blew my mind. I was like, wait a second. So for that reason, then I started considering them what I call primary candlesticks. And so what I've done is I have what is called primary candlesticks, I have what I call secondary candlesticks, and I have what is called auxiliary candlesticks. And so that basically just breaks down every candlesticks into 3 groups. You either one of the 5, which again, those 5 95% of the time, any reversal, I can promise you, any reversal that takes place in any stock usually would have those 5 in there. If it doesn't have those 5, then you have the other 2, which I consider the secondary, okay? And then everything else, they can fall into the third group, which I consider auxiliary. But what you'll find is any one of those auxiliary candlesticks, when they appear, will almost always be followed by those 5. And so that's when I realized, like, wait a second, this is a shortcut. I don't have to worry about the 130 different candlesticks out there. Just study the 5 and the extra 2. And then those are 7. You learn those 7 candlesticks, and literally that's all you need to know as far as candlesticks is concerned. And it
Wow.
will tell you when a stock is ready to reverse, when a stock is ready to crash, when a stock has a strong bullish trend ready to take off, when a stock is dropping and it's coming to an end, or it's going to come to an end within a few candles. Like, it can tell you so much about what is about to happen to a market. So a lot of times when you and I were on these calls, I recall, either yourself or David would say, hey, where do you see the market by the end of this week? I've already seen one of those 7. And I was like, oh, snap. Okay, so this one showed up, and I know what it's telling me is like the failure rate of this candlestick is like almost 0 to like 3%. That's the failure rate, 0 to 3%. So it's like, okay, if something, so that's why you would, you might ask me, or they might ask me, say, what confidence do you have? I say, I have 90%, 95%. One time I even went to 99.99% sure that the market is going to do X, Y, Z. And it's because I saw those candlesticks that I've trusted so much, is that when they appear in the right conditions, without question, I don't even question it anymore. So I always tell people to start there. The candlestick course, learn that, master that. I said, please master. It's like trying to learn a new language and not knowing what the alphabets are.
Right.
It's like, it's just the language of technical analysis to me is candlesticks. You learn that. Now, whether you use it or you don't use it, the point is you know what it's telling you, so you're not oblivious to what's happening. And this is why I say we don't guess, we don't hope, we don't wish. We know, we see it, we know it, and then it's just a matter of expecting. So that's the first thing that we cover. From there, I say, okay, once we understand that, then we start going into more things like, I did a whole study on IPOs, because one of the things I found was I used to get so frustrated when I would see articles that said, if you're invested in Amazon 1997, this is how much you would have today. I don't know why, but that irks me every time I see those.
I was like, why are you telling me this now?
Exactly. That's exactly what I mean. Why telling me this now? Is like to make me feel bad that I didn't catch it and all that stuff.
Yes,
like,
exactly. Yeah.
And then they'll say, oh, and then they'll go, oh, 10 years ago. I'm like, 10 years ago. So I can pick any stock from 10 years ago and tell you what you would have made if you had bought it 10 years ago. But the question is, how would I have, which ones are doing that today?
Amen.
That I need to get into that 10 years from now, 5 years from now, would be the ones you guys are going to be talking about. So that was what prompted me to go start doing my new research on IPOs, because again, it was all these IPOs and they'll tell you, so long story short, I started doing some research, and I spent about, I think, 9 months doing the research on IPOs. And my biggest goal with IPOs was like, okay, there are those that do well, and there's a plenty of them that don't. What is the difference? Is there a pattern there? How can I tell which ones are doing well from which ones are not? And so after 9 months, I gathered all my research together and I started seeing very clear patterns that would show you. And so because of that, the very first one, I took that, and the very first stock I traded was Ferrari, ticker symbol RACE. We bought Ferrari at $44. Based on this whole research that we've done, the stock went up to $120. I was like, yes. Then we bought Alibaba, when it was at $90, doubled in price. We got companies like Match.com and PayPal, and a company called Ollie Bargains. We bought that one. Planet Fitness. We got all kinds of companies that we just like, wow, these are great companies that are all doing well based on the fact that they follow this same principle of when a stock comes out, okay, and that's the thing, when a stock comes out, they get the hype and everything, but then they come crashing down, and then you see that like the ones that are going to do well would take off like crazy. Spotify, Shopify, all these kind of companies, Roku in the beginning before. So needless to say, I have a whole course on that I put together on that. And then the other ones are like seasonality, which to me was something that I thought, wow, why is it that nobody pays attention to seasonality? Because in my head, I was just like, everything is seasonal in life, even the
Amen.
weather,
Yes.
everything is
Yes.
seasonal, and businesses are seasonal. And then I found out that the stock market is seasonal as well.
Sure
And so as I
is.
started doing more research in that, a great example I give to people, I say 1-800-Flowers, okay? Valentine's Day, February of every year, we have Valentine's Day. Every year. The whole world celebrates Valentine's. The whole world celebrates Valentine's. I said, you have to just think to yourself, even during the pandemic, guess what? People still celebrated Valentine's. So you ask yourself, who are the companies that stand to benefit from Valentine's Day? Chocolate companies, candy companies, flower companies. And they say, are any of those traded on the stock market? And how do they perform during that period of time? That's what seasonality is all about. And so I started doing research on that. I say, wow. And then in my head, I said, wait a second. If I could tell which stock has seasonality in January and which one's in February and which one's in March and April and each month of the year, we are now coming to the holiday season. Guess who has seasonality during the holiday season? Walmart, Target, Best Buy. Why? Because
Amazon.
Amazon. Thank you. People are going to be going out there buying stuff for Christmas. And it's like, why are we not? And I see so many people lining up in front of Walmart stores, trampling over themselves so they can pick up a $200 deal or $50 deal, but they will not invest in the stock leading up to that. And that's what seasonality is. So in my seasonality course, I go into extreme details on how to pay attention to like certain patterns that happens in April. You have tax season. Why anybody is not investing in 1-800 H&R Block or Liberty Tax during tax season is beyond me. People are so focused on filing in taxes, they don't even think about investing in companies that benefit from that. And that happens every April and every October. And why people don't pay attention to these companies is beyond me. So it's just stuff like that. You talk about August, back to school. How many people pay attention? You know how many people all around America has to go back to school in August, and we're not paying attention to companies like Dollar Tree and Dollar General. A massive amount of people have to go to buy supplies, school supplies, and everything. So when you start understanding the cycle of what happens in the market and what happens within certain stocks, and then you combine that with technical analysis and candlesticks, it's like, wait a second, this is not guessing anymore. It's all about preparing. You don't have to guess. You can literally prepare, so much so that I even tell people we can prepare 3 months ahead of time because we know the things that are supposed to be happening in the next 3 months. And then I started thinking to myself, it's like, isn't that how all companies are in the stock market anyways? They give you a report every 3 months and they say, hey, here's our report. Here's what we think we're going to do next quarter. And then they either meet expectation or they blow past expectation. And if they do well, company goes up, stock goes up. If they don't, the stock goes down. But the one thing they always do is they always project 3 months, 6 months, 9 months, a year. And then with this whole pandemic kind of situation and the inflation, they're like, okay, yeah, we can't forecast what's going to happen. And because they could not forecast what was going to happen, what happened to their stocks? Tanked. But every 3 months, every single company that is on the stock market has to report what they did the last 3 months and where they think they're going. And I said, and we are trading those companies. And I asked people, how many people can truly say in their own portfolio, this is what we projected for the quarter. We either met expectations or we didn't. This is what we expect next quarter based on what we know and what we see out there. And that's my thing. So because of that, now we can literally start planning for, like right now, we're already beginning to plan for the first quarter of 2023.
Right.
Now is the time to start planning for this. Like, hey, based on these companies, which companies are going to be setting up, getting ready for January, February, March of 2023, so that by the end of December, which is next month, we are positioning ourselves in those companies. And then it's just a matter of sitting back and managing these positions on a weekly basis. And this is so much more easier for my psyche to just plan ahead and then just monitor my trades every week and not worry about what the Feds are saying this week, what CPI results are saying next week, what inflation data is like. I don't worry about all that because we've already factored in a lot of this stuff ahead of time. So that's my seasonality course. And then a few others that we have is like earnings. We did a lot of research on earnings because earnings comes up every single quarter. So it's like, hey, how do you take advantage of earnings? And one key thing that we did is that we focused more on companies after their earnings, which is something very unique because before that, I was a guy that always wanted to see the companies on the day of their report, like trying to buy in the day before the earnings results and hope that it has a pop the next day on earnings. And that was just too much of a 50-50 for me. So then I said, well, what if we change our strategy around? Because what I started noticing was like, there are companies that come out with earnings, good forward guidance, and for the next 3 months, just shoot up like crazy. Right. And I said, wait a second. So you mean to tell me, okay, yeah, this company gapped up 10%, 20% in one day, but you're talking about over the next 3 months, they up 50, 60, 70%? And I say, wait a second, it's much better to focus on the ones that are going to go up over the next 3 months, 50, 60%, than worrying about whether it's going to gap up overnight. Now, if it gaps up overnight, you make a lot of money, but you also have to be right. As opposed to if I'm watching a stock that I know is going to do well for the next 2-3 months, I can be in those trades. I can monitor that a whole lot closely. And because earnings is already over, there's no uncertainty there. It's very consistent. It's slow, but it's steady. And so that's what we do with the earnings. And then what else do we have?
Well, let me ask a question while you're going through that. So what you've just described, these are courses that you have, so that you're teaching other people how to go ahead and do all this work for themselves.
Exactly.
Do you have also product where they can come in and see the evidence? Well, not the evidence, but you've already done this work and you're making, here's what I'm recommending, or here's what I'm, different.
So we have that in a way, that's on every Monday night. So every Monday night, we have a live webinar that we also offer to people that come join our community, so to speak, where this is where we now talk about those stuff, okay? And so if they were to come to the Monday night webinars, what they'll see is me now beginning to start talking about, like, hey, here are the, because earnings season just ended for the fourth quarter. The majority of earnings season just pretty much ended, or if it's not by Tuesday, I think it ends on Tuesday. And so now this is the time to start preparing for the companies that are going to do well between now and January. Okay. So you come to a Monday night, every Monday night, we start talking about those type of stocks. Seasonality is kicking in really big right now. So you come in on Monday nights, we talk about that too as well. Okay. And then people bring in individual stocks that they're looking at, and then we start analyzing the charts, we start analyzing the candlesticks, we start looking at all these different things that tells us what to be expecting going forward. And so that's where you get the course, you learn about the course, but then you come into the Monday night and you actually watch us doing it live, is what ends up happening. Okay, you watch us doing it live, you watch us analyzing stocks, you watch us picking the stocks as we position. Now, that's the only thing. We don't do day trading. So everything we're doing is we positioning ourselves. It's okay, here are the stocks that are ready to go higher. Here are the stocks that we should stay away from. Here's the stocks to watch. And then say, okay, by next week, we'll come back. Somebody remind me about this stock next week, because we need to pay attention to this, see if it's ready to go and stuff, et cetera, et cetera, et cetera. So that's kind of like what we do when that comes.
I love it. That's actually, that's great. So trying to put it together, because I want people to understand, it's like that, of course, we're going to include your website, and I'll just say right off the bat, www.rightsidetrading.com.
Correct.
That's the name of the website. And all of this information, everything that we're talking about, that Wally has been talking about, you will be able to find on that. And then also at the same time, should you have any questions, then I believe that there's there's an email address.
Email address.
People can email for, if they have questions, can you tell me about this, et cetera, et cetera.
Info at Right Side Trading. Info at Right Side Trading. That's all it is.
Info at Right Side Trading, which all works. I have a lot to go on here, Wally, because I'm just realizing it's like, wow, I need more. We need another hour, which I may ask you to do.
We need a part two. We need a part two.
We might do a part two, to tell you the truth, because I do have the time constraints in terms of what actually can get published. Actually, not
Sure.
what can get published, but what then goes out, and what, again, using the numbers on what people actually will sit and listen to.
Sure.
And I want them to be able to hear every word you're saying, because folks, this is what I now have become accustomed to by hearing what Wally's work does as we share the shows that we are on together. And so filling in the gap of like how this all came about and where this all stems from makes such total sense to me about the calls that he makes, because I want to tell you folks, if you have been graced by hearing Wally talk and give a call, so to speak, that's what we would say, where he thinks particularly on one show that we've done often together, the main question is, where do you think the S&P is going to close on Friday? Because we do the show on Monday morning. Where do we think that the S&P is going to close on that Friday? Higher or lower than Monday's opening? Which is kind of just a catch to kind of come in and listen to the show. But there are very specific reasons that you've given the answers that you give. And now that makes total sense to me. It did before, but now I hope that others, if they're listening to what your background tells them, that it would also help them to decide. So I know that you've had a lot of success because we've discussed it one-on-one without anybody else listening, folks. And so I do want to suggest that if nothing else, that if what you're hearing today, I want people to understand they need to go to rightsideTrading.com and start pulling the information, start looking at the information. And so, of course, within there, well, of course, it's up to you what your pricing schedule is going to be, but all of this is available to them and to purchase.
If I may add to that too, I think one of the things we did was to put a special offer together for your audience as well. And so I think if they go to rightsideTrading.com, just /storm, because we're in the eye of the storm, right? So just /storm. I think anybody who's hearing this podcast and wants to get part of that deal as being part of your audience, if they just go to /storm, they'll be able to get the discount. I'm not sure what it is. Tanya's been working on the discount and everything, but they'll be able to get the discount on there by just going to the Storm as opposed to just a regular website. So that's something that people need to be aware of. And then one more thing I also would like to say before we end is that I have a platform called the Right Side platform. In the Right Side platform, it's basically a algorithm-based software that literally takes all my quantitative data, technical analysis into one, and basically comes out with the analysis that I would have done personally, but now the computer's doing it. Okay. And so when you put up any individual stock or ETF, you put it up there, it will literally tell you on the daily chart, weekly chart, monthly chart, whether you should be buying or you should be selling, whether you should just wait. Like, let's say you're already too late to try to buy this stock. It's like, it's too late. Don't chase this stock. Or if you're already in this trade, and they'll just tell you, hold on to the positions. Don't panic. Just hold on to the position. Everything is fine. Nothing has changed, because it's factoring all the candlesticks, it's factoring indicators, it's factoring quantitative data and stuff like that would tell you, yep, you might. And then it would even tell you, like, maybe you want to go ahead and start placing stops. So each and every day or each and every week, it will let you know based on what's happened now. Just leave it alone. Don't touch it. Come back tomorrow. Or based on what's happened today, you might want to go ahead and place your stop right now. And like, it will literally tell you, place your stops. If it doesn't tell you to place your stop, maybe you should be buying more. It would say buy more, buy more. Or if it say, look, get out, sell. Other times it'll say you need to get insurance, protect yourself,
right,
get insurance on the stock. So it literally walks you through each and every day. So I always tell people, I said, you're talking about the artificial intelligence of my mind. This is like, if you were to call me, Wally, what do you think is happening to the S&P right now? You can literally find out exactly what I would be saying by going to that platform. You just plug in that and it will tell you, guys, I promise you, no matter what I would say, no matter how I dissect it, how I analyze it, that AI will be able to do the same thing and say, okay, based on this stock today, what time frame are you looking at? Oh, I want the daily chart. On the daily chart, just hold on to your position. On the weekly chart, buy more.
Is that something that folks can purchase on your website and then they
Correct.
download it into their own computer and then it goes to their charting service?
No, so what it is a independent web-based website. So all you have to do is just, go to the website, and it's what you have to do. So you don't have to download anything at all. You would get assigned a login and a password, and you just log in like you go into your Amazon account, but now you just go into your Right Side platform account and just say, hey, Wally, this is my password. And then you say, hey, I want to know what's going on with the S&P today, or what's going on with Apple today. Should I be buying more Apple? And it would literally, it's almost like as if you have me there saying, Wally, what do you think is happening to Apple? Should I buy Apple or no? And it would tell
I
you
think
bullish,
that is
bearish, everything.
brilliant.
Yeah.
That is brilliant, my friend.
Thank you.
Well,
A lot of
because
work.
I post daily on YouTube. I get a lot of questions. What do you think? What do you think? It's like, oh, I got to put all my intelligence into an algorithm so that
Yes.
just come to the website and plug
Just
it
go
in.
plug it in. You don't even have to
I
ask
think
me
that's
anymore.
brilliant.
Yeah, 'cause
Congratulations on that one.
it's funny that you said that, because that was the same thing that was happening. People, when I first started, I was, excited to share my knowledge with people. So I'll spend time trying to explain. I said, you know what? Why am I sitting down here explaining? I'll be like, if I had 100 people asking the same question, I won't be able to get to every single person at the same time. That would be bad customer service. And so that's when I said, what if I just send them to, like, this is exactly, and that's the truth about it. This is exactly how I think, how I would analyze it. And I've had multiple students now. I see them on their own social media now. They go out there and say, hey, we expect the market to drop tomorrow. And it's like, people are like, how do you know that? This is the thing. And it's like, it's just literally just taking the information from that platform and saying, yep, this is what it's going to do. Wow. And that's it. So yeah, I think that will be something that people will truly benefit from, if they're interested in understanding where the market is going.
I'm market analyst Michael Filighera of Traders Helping Traders, helping you make informed trading decisions for the week ahead.